Hi, Tim Hart here, and thanks for registering your interest in the PMA Trust. Now, along with this video, you would have received the full information memorandum, and we asked you to read through that in its entirety. But we put this video together just the real high-level aspects of the opportunity, as a bit of a help to help you get started. So let's jump into why does the PMA Trust exist? Okay, so it's basically there to offer wholesale investors a better rate of return than traditional bank deposits while maintaining an acceptable level of risk. Okay, so it's all about that risk to return ratios and making sure that we can maximise that return, but without taking excess risk to actually get there. So how does the PMA Trust do this? So the first one is it does short-term commercial loans. Now this is very particular in that we find borrowers are prepared to pay much higher rates of interest if they're only borrowing the money for a short period of time. So most of our loans might go 4, 5, 6 months, and we find that we can get a much higher return than if we're trying to get like a bank loan, like a 25 or 30 year loan. Okay, so that's one of the things that helps us get much higher returns. The other one is that we make sure that all our loans are secured, and not only secured, but secured by Australian real estate as well. So that way we know that if anything goes wrong with a borrower, that at least there's some security there that we can recover on to get our capital back if we need to. The last one, and really important with the PMA Trust, is one of its advantages is it's a diversified portfolio. So you're not just investing in one particular loan, you're not having all your eggs in one particular basket. When you invest in the PMA Trust, you could invest just the minimum, which is $50,000, but you've then got exposure to all the loans that the PMA Trust has. So that diversification really gives a lot of investors peace of mind and really helps de-risk the situation for them. So let's look at what the PMA Trust actually does. So it's got target returns of 12% per annum. It's got an experienced mortgage manager in Private Mortgages Australia that does all the day-to-day operations in terms of sourcing the opportunities, managing them, and even doing all the recovery work on them as well. Now, overseeing all this, we've also got in place an experienced independent trustee, Primary Securities, that holds an Australian Financial Services licence. Now, they also hold the investment on behalf of all our investors as well. So that way you know that you've got an independent trustee holding all the assets. The other thing we do is we have annually audited financials. So we elect to get our financials audited, so that gives a little bit more peace of mind and integrity to our investors that all the figures are correct and it's been checked by an independent third party. The other we have conservative loan-to-value ratios. So typically we'll only go up to about a 75% loan-to-value ratio. So that way that there's still plenty of equity in the property if we do need to recover on that property as well. So what we find is over the portfolio, while we might have some loans that are at 75, we've also usually got a lot of loans that are a lot less. So it means our overall loan-to-value ratio of the portfolio is usually even less than 75%. The last one, and we find is really important, is that the directors of PMA, the mortgage manager, are actually substantially invested in the trust as well. So, we put our money where our mouth is, and we believe it's a great offer, and that's why we put our own personal cash into it as well, and we get the exact same return that the investors get. Okay, so that's for us is a high level of congruency with the PMA Trust that we think it's a great offer. The last one we've got here is the fees and charges and how do you get your returns and how do you get your money out. So the very first thing is the application fee. So for $50,000 up to $250,000, the application fee is 3.3%. As soon as you go over $250,000, it drops down to 1.1%. Now, I want to also mention that this is a deferred application fee, which means that you don't actually pay the application fee up front. We take it out of your distributions. So the investment kind of pays for itself. It pays for the fees. We just take it out of your distributions until it's paid in full, and then we'll start basically paying the distributions to you. The other one is the cash distributions that we pay are all paid quarterly. So every quarter we pay up to 100% of our profits, and we pay that out to our investors. So it's got that nice regular quarterly cash flow for our investors. We also do quarterly redemptions. So you can put your notice of redemption in at any time, as long as it's not 2 weeks before the end of the quarter. And every quarter we will process all the notice